Welcome to Silver Heist. Thank you to our returning subscribers and guests. Well, gold is off to the races. It's April 9th. Gold closed. I believe this is the closing price, $16.85, potentially a 5-year closing price high, and it got really close to $1,700. So here's the 5-year chart. It says the closing high was $16.79. I think we beat that today. And look at going back 5 years. Definitely the highest it's been. Here is a Bloomberg story. Gold jumps to 7-year high as Fed unleashes new emergency aid. Investors seek insurance against economic deterioration. Stimulus and low interest rates fueling demand for gold. Gold reached a 7-year high as massive U.S. filings for jobless benefits and sweeping steps by the Federal Reserve to shore up the economy bolstered demand for the metal as a haven. The metal closed at the highest since late 2012 as investors sought insurance against the possibility of further economic slowing even as U.S. equities rose after the Fed moves. The prospect of easier monetary policy and low borrowing cost is also fueling demand for bullion, which doesn't offer interest. The yields on U.S. Treasuries fell on Thursday. Unprecedented monetary and fiscal stimulus, negative yielding debt, and low interest rates for longer imply gold will continue to attract a flight to safety and quality. So also, Fox Business, also today, Fed's coronavirus stimulus sparks gold rush. ETFs are making record purchases of the precious metal. Gold prices spiked Thursday after the Federal Reserve announced $2.3 trillion lending program to cushion Main Street from the disruptions caused by COVID-19. In the last 6 weeks, we've seen very significant injections of cash into the economies, and it's very good for gold. Mark Bristow, CEO of Toronto-based Barrick Gold, the world's number 2 gold miner, told Fox Business. The Federal Reserve has taken unprecedented measures in recent weeks as actions used to slow the spread of COVID-19 have brought the U.S. economy to a near standstill. Aside from slashing interest rates to near zero, the central bank has promised to buy an unlimited amount of Treasury securities and launched a number of lending facilities to ensure financial markets are functioning properly. The Federal Reserve's action has caused huge demand for gold. Bristow said there's a tightness in the gold market as physical retail purchases are happening at a pace not seen in a very long time, and the exchange-traded funds are making record purchases of gold. The surge in demand has driven the price of an ounce of gold up 10% since March 3rd, when the Fed first cut rates in response to COVID-19. And then Forbes. This was yesterday. Excess money supply has been like miracle grow for gold prices. The $2.2 trillion coronavirus relief package that President Donald Trump signed into law on March 27 is just the beginning. The Treasury Department is now seeking some $250 billion more to replenish small business loans, and there's hope that the President and House Democrats can agree on a Phase 4 spending deal, one that may target infrastructure. Trump has asked for $2 trillion. And that's just the U.S. As many as 285 stimulus measures have been announced around the world in the past 8 months, the most ever by a wide margin. And this is all before considering monetary stimulus in the form of near zero rates and quantitative easing. The U.S. economy is being flooded with excess money and liquidity right now. Compared to the same period a year ago, M2, money supply, which includes not just cash, but also savings deposits, money market funds, and other near money, has increased some 12%, the most in 10 years. The money supply flowing into physical gold. All this excess liquidity has to go somewhere, and historically it's acted as miracle grow for gold prices. Look at the chart below. There's a clear correlation between the annual growth rate in M2 money supply and the price of the yellow metal. In the times when the money supply surged from the same period a year earlier, gold prices followed. So here's the chart they're talking about. The dark line is the money supply and the gold line is the gold. So right around 011, 012, increase in the money supply, big spike in gold, and then right around 019, the same. Gold ETF inflows smash records. Global exchange traded funds ETFs backed by physical gold notched a new all-time record in the first quarter of 2020, attracting 298 metric tons or net inflows of $23 billion for a total of more than $164 billion, according to a report by the World Gold Council. That's the highest ever in US dollar terms for a quarter and the most in tonnage since the first quarter of 2016. The World Gold Council expects the recent drivers of gold to persist, including a widespread market uncertainty and the improved opportunity cost of holding gold as yields move lower. With the Fed taking interest rates to zero for the foreseeable future, gold could do well as it tends to outperform during easing cycles. Additionally, multi-trillion-dollar fiscal stimulus policies to combat the economic impact of COVID-19 could prove inflationary, a development that could support gold prices in the long run. Okay, there's still tight supplies. Here's APMEX, a 1 ounce gold. There's a spot price, $16.94, and for one quantity, it's $18.89, almost a $200 premium on a 1 ounce 2020. And so here's Monument Metals, 1 ounce coin, pre-order, shipping soon, not far away, almost just a week. But there's a spot price, $16.82, and there is the price of the Bullion, $18.50, about $170 premium. These are higher premiums than usual, so the demand is still high. And so SD Bullion, their gold spot is $17.02. This is on pre-sale, so not ready to ship. Well, it's coming April 17th, about the same, but $18.97. So almost $190 premium. So mints around the world have closed, perhaps remain closed. Royal Canadian Mint closed for a short period. US has closed the San Francisco Mint until further notice. The West Point Mint in New York closed for a short while and reopened. Refineries in Switzerland have closed. So the supply has tightened and the demand is increasing. So perhaps you can find a better deal than what I found, but gold is on the move. The prices are off to the races. If you're in a position to buy it and you think the price is rising higher, then now may be the time to place your bets on gold. If you could spend $1,000 of your upcoming US stimulus check on precious metals, would you choose silver or gold? If you want to explore that, please watch our featured video.